Good morning, everyone, and thank you for joining us on Morning Markets from True Potential. Today, we'll look back on asset market performance yesterday and focus in on some of the economic data that we've had this morning from the UK. So, just looking back at asset markets yesterday, very much a tale of what was happening just as we moved through geographies. Really, we saw a good performance from Asian equity markets, up about 1% on the day. Moving into Europe, a slightly weaker performance there, with the Euro Stoxx 50 down about 1.4% on the day. Here in the UK, the main market down about 80 basis points. Moving then into the US, we saw an okay marginally up performance for the S&P 500, but a stronger performance from the Nasdaq, up 0.7% on the day. Looking then into Europe, and what were some of those factors that appeared to be influencing sentiment yesterday? A couple of points to really highlight there. With the German IFO business confidence survey, which came in a little bit lower than expectations, coming in at 90.1 from around 92.2 last month. And really, a consensus there had been expecting a more modest decline. And it just does highlight, to an extent, the challenges that the service sector continues to face. We do know that in manufacturing, Germany has continued to move ahead, but services has been a key area of concern, both in Germany and much broader, but that did impact sentiment to an extent yesterday. We also had some concerns really around the rollout of the vaccine in Europe, in particular with both Pfizer and AstraZeneca suggesting that they wouldn't be able to meet some of their delivery targets for Europe for the first quarter. And that does appear to have raised a bit of a sentiment, a bit of a political debate within Europe as to why this is the case. So that's something that's likely to rumble on in the background as well. And alongside that, we did get additional travel restrictions being put in place to prevent COVID-19 being transported. So that is one of the other factors that did influence sentiment yesterday in Europe. I think then, just moving on and thinking about how that played into other asset markets and the changes in sentiment, we did see sovereign bond yields come in yesterday, and that's something that I suppose over the past number of weeks you've heard us talking about how bond yields have moved out. We've started to see that other direction, and that's a natural response to market participants to uncertainty, the change in the circumstances. So if we look at where sovereign bond yields came to yesterday, we saw the US come into 1.03 from 1.09 previously, and then the UK 10-year gilt was in at 26 basis points from around 31 previously. So just giving you an indication of the magnitude of the change there. That also, in the sense of the US market, was a bit influenced by some comments around the fiscal support package that we know the Democrats want to get passed, but the timeline for that still remains a little bit uncertain. And we did get some comments yesterday that suggested it could be mid-March by the time this is worked through from a political perspective. Whilst that maybe will disappoint some market participants, it may not be surprising, because that coincides with the current measures that are in place for unemployment support, which would end at the end of March, hence why they want to have a back-to-back arrangement. That's not to say that something couldn't be done before that, but it may be being set out as a bit of a backstop, at least in the negotiations. I think then one of the other things just to touch on really yesterday in Europe was back to Italian politics. We touched on this last week, and we thought through the course of the two votes in the Parliament and the Senate, we would have moved on from the current situation. However, what seems to be somewhat of a technical manoeuvre by the Prime Minister in terms of dissolving the current government and being asked to form a new coalition government ahead of a vote on Thursday. So that's something to watch, and just how political risk is manifesting itself. On the political risk front, there also was some reports in China about issues there in the South China Sea, and whether they would be ongoing with some military exercises there, and that did influence sentiment a little bit in Asian equity markets overnight, where we have seen most markets lower overnight, just on the back of some of that news flow that we've touched on. Just this morning, data out on the UK labour market, one of the few releases on the UK economy this week, and it just does sort of serve to highlight a couple of the trends that we've been discussing. Unemployment rate moved up to 5.0%, albeit that's slightly better than expectations, where we had been at 5.1%. But also within the data release from the ONS, it does speak about a further deterioration in the labour market for December, which will feed into the data next month. I think also just within that, it's just evident how important the furlough scheme has been. I think numbers there could have been worse if the furlough scheme hadn't been extended from its original cut-off point to the cut-off now at the end of April, with some speculation yesterday that the Chancellor may look to extend that again. I'll leave it there. Please do subscribe on our YouTube channel, and we look forward to seeing you again tomorrow. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.